Hello and welcome to the trade setup. Today we are looking at PayPal and we have formally invalidated the blue scenario. So I'm going to remove that from the chart. We can still entertain the case that we are only in a C wave here and we have a 1, 2, 3, 4, 5 that should actually take us into the support zone between $67 down to around $60. That would then take us into, either the C wave in yellow or the third wave in white. Now there is a risk that we have completed this wave 2 in yellow here that would actually take us to newer lows, at least regarding this local low at around $50. So we still need to be cautious, especially since we first reacted to the 50% retracement area at around $72, $73, and then we reacted to the 61.8% retracement area in the resistance zone in yellow. But still, we did have a possible overshooting B wave, as I stated even in the previous video. There is still significant likelihood that this was a wave B top, since we reacted perfectly to the 123.6% extension, or rather retracement, in an overshooting B wave. So we would now be tracking a 5-wave move in wave C to the downside, and that would be a wave 1, a wave 2, a third wave that is still ongoing, and then a fourth and a fifth that should take us to the support zone area that we have on the chart for quite a few weeks already, since we completed this wave 1 or wave A top here. Now I can provide a count, a provisionary count, because I don't think this third wave is yet finished. And within this third wave, I can say that we have completed the first 3 waves and we are now tracking the fourth wave. Let me just make this a very small count. And yeah, for this fourth wave, we are looking for a support zone, or rather a resistance zone in this case. I meant to make this yellow, between $71.7 up to around $72.7. If we break this resistance, I wouldn't necessarily say that we are going directly higher. For that, I would track the idea that the actual third wave in the C wave is complete and we don't have a micro 5-wave move within the third wave. But then I would also need to add, I would also need to add the 61.8% retracement. And yeah, if we break above $74, I would actually expect more direct upside, because it would invalidate this 5-wave move to the downside. Okay, so you have the invalidation levels, but we are still mainly tracking this wave 4 level at the moment. But yeah, you have the invalidation levels for the yellow C wave to the downside, and you do have the support zone between $67 down to around $60 that is still active and still very valid. It's not a guarantee, I'm just mentioning again, it's not a guarantee that we are getting a new high at the moment, especially due to this supposed overshooting B wave top here. But it's still a good risk-reward ratio, because if we break below this level at around $56, it is completely invalidated. And yeah, I would then expect much lower lows, much lower levels. So a stop loss below that area would help you a lot to increase the risk-reward ratio that we are always looking for in Elliott wave analysis and when we are using Fibonacci retracements for trading. So yeah, this is the trade setup. I hope you enjoyed the video, and if you did, don't forget to subscribe. Let me know what else you want me to cover, and I hope to see you in the next videos. Bye bye.